A very good morning, traders. Welcome back to the channel. This is Curious Combo. And if you're new to the channel, we'll make trading a boring, business-like, predictable process. And as we head into the morning here on Europe DAX, today on Thursday, February 27th, looking at the market yesterday on the hourly time frame, the European pre-market was here. The oscillators, as we trade with the stochastic double stochastic strategy, they were kinda highly oversold already to start with, and the market just inched up higher. As I was speaking about yesterday, the all-time highs are from 19th, from mid last week. Early in the session, we went and touched the 22,936 just to dip lower all the day until the evening, late hours of the US closing. So yesterday, the markets inched higher and went and touched the 22,824 points in the higher point of the range, but didn't inch up all the way to the top of the range. And then there was just big confusion and a double top forming between the hours of 3 o'clock and after the US Open, 7 o'clock to the later session. Looking at the 15-minute chart, we can see the action more clearly here. This is the Open, 10 o'clock Europe, and it inched up until US pre-market pretty much, and then big down, big up, and a bigger leg down to 22,577. This was naturally caused to President Trump saying that he will initiate 25% tariffs on all European goods, not just autos, but to everything. So the market corrected quite clearly in the local evening aftermarket, and then it's been hovering around 22,687 to 603. And if we look at how the stochastics played, the fast one was leading the way to the US Open and pre-market. We went more to the overbought, and then after Trump's announcements, we were able to follow the stochastics all the way down to the oversold territory on the 15-minute chart. And at the same time on the 1 hour, it's now in the mid-range. A big confusion, obviously, on the markets. So heading out for Thursday's Open, today 8:30 a.m. US initial job claims will be out. The forecast will be 225,000 job claims to the previous 219,000. Durable goods orders and durable goods minus transportation and GDP, the second reading for Q4, will be out also in the early in the morning and session. So European markets will be quite on a standstill before that, but be on a lookout for strong volatility early in the US session and pre-market. So 1 hour doesn't give us really information on what to do if we're looking at the daily chart still. There's a clear double top has formed all times here from last week's Wednesday down and up. Couldn't go and retest the 22,930 level. The oscillators on a daily time frame are pointing a bit upwards on the highly overbought level. But on the intraday where we're taking our positions, if we are, this is the 15-minute. If we drill down to the 5-minute, it's even flatter now. Oscillators are grouped to the downside, to the oversold territory before market open. So we might be looking this very flat, if not continuing to the downside. The next support we would be able to find here on the 22,578 and around these levels of 532 to 22,469. Yeah, these seem to be pretty strong last 2-week support levels. Then the next big leg down goes all the way to 22,322, but of course naturally we're not looking for anything like that. So yeah, pretty much sitting on my hands and watching this one out. If something, quick scalps on the open if something, and then the US markets after 3 p.m. European time, closer to 8 o'clock US morning till 9:30 after the market has opened. But other than that, it's a pretty clear indicator to stay off the market before we get a clear confirmation and the macroeconomics and how the job claims, initial job claims will be played out, and the GDP second reading. Okay, this is it for today. It is Thursday, February 27th. Good to have you here. Please do leave a comment down below. Give me a thumbs up. Give the channel a subscription if you want to return to my daily recaps. And I will be here anyway pretty much all day. And then I'll see you again tomorrow. Let's see how this goes.